people would be critical, a lot of people would be upset. I had over 1 million accounts in Magellan. 1 out of 100 people in the country were in the fund. I received thousands of letters, thousands of telegrams and phone calls, and almost all of them said, gee, I really wish you'd continue to run it, but I think you're doing the right thing. Thank you very much. People that weren't in the fund said, I think it's a smart decision.
Mr. Peter, first questions is, how did you first get interested in the stock market?
Well, I grew up in the 1950s. I started caddying when I was 11. So the would have been 1955, and in that part, the 50s were a great decade for the stock market. I caddied a very nice club out in West Newton, had a lot of people, corporate executives, and some of these were buying stocks, and I remember them talking about stocks and they mentioned the names, and I'd look in the paper and look at it a month later, a year later, and I noticed they were going up. And I said, gee, this makes a lot of sense. And so I watched it. I didn't have any money to invest, but I remember the stock market being very strong in the 1950s, and some people, not everybody, but a lot of people on the golf course talking about it.
Mr. Peter, what was your first stock?
Well, when I got a caddy scholarship to college. It was actually a partial scholarship, a Francis Wyman scholarship, a financial aid scholarship, but it was $1,000 to go to Boston College, and they gave me a $300 scholarship, and I got to earn over $700 a year caddying. So I was able to build up a little bit of money, and I worked also during the winters. So while I was in college, I did a little study on the freight industry, the air freight industry. And I looked at this company called Flying Tiger. And I actually put $1,000 in it, and I remember I thought this air cargo was going to be a thing of the future. And I bought it, and it got really lucky because it went up for another reason. The Vietnam War started, and they basically hauled a lot of troops to Vietnam in airplanes, and the stock went up, I think, 9 or 10-fold, and I had my first 10-bagger. I started selling it, I think, at 20 and 30 and 40, sold all the way up to 80 and helped pay for graduate school. So I almost had a Flying Tiger graduate school fellowship.
Mr. Peter, you originated the expression 4-bagger, 5-bagger, etc. What's that mean exactly?
I've always been a great lover of baseball. I mean, if you grew up in Boston, you know that the last time we won the World Series, Babe Ruth pitched for us. It was 1918. So it's been a long drought here. So I've always loved baseball, and the 10-bagger is 2 home runs and a double. It's you run around a lot, so it's very exciting. Well, I think the secret is, if you have a lot of stocks, some will do mediocre, some will do okay, and if one of 2 of them go up big time, you produce a fabulous result. And I think that's the promise to some people. Some stocks go up 20 to 30% and they get rid of it and they hold on to the dogs. And it's sort of like watering the weeds and cutting out the flowers. You want to let the winners run. When the fun ones get better, add to them, and that one winner, you basically see a few stocks in your lifetime, that's all you need. I mean, stocks are out there. When I ran Magellan, I wrote a book. I think I listed over 100 stocks that went up over 10-fold when I ran Magellan, and I own thousands of stocks.
Is there so much pressure because you're handling so much money for other people?
It wasn't the pressure. I loved the job. I mean, I worked for the best company in the world. I get paid extremely well. We had free coffee. I mean, it's a great place to work. I could see any company I wanted to see. I didn't have to, say, get permission to go visit companies in California or Indiana. I just lot of freedom, a lot of responsibility. The pressure wasn't it. It was just too much time. I was working 6 days a week, and that wasn't even enough. Talk about going from 1 to 5 to 10 billion, and whether people thought it was getting too big. Sure. I certainly remember when Magellan passed the billion. I remember it was sometime in 1983, and then remember I think in 84, I don't remember exactly when it became the largest fund in the country, and people said, Magellan's too big at $1 billion to get in, to get out. It's hopeless. Leave. And then when it became a largest fund, it's obviously too big now. And then it got to 5 billion, they said, forget it. When it got to 10 billion, they said, forget it. And I'd always say, if I could beat the market by 3 or 4% a year, I'm really doing a service to the public. And then after I left, they said, the fund's too big. Forget it. And, Magellan's done extremely well in the 6 years since I left it. It's beaten the market. It's beaten 80% of all funds. So I hope they keep warning people to stay away from it. It's been a terrific thing for it.
Mr. Peter, can you talk about market timing?
The market itself is very volatile. We've had 95 years completed this century. We're in the middle of 1996 and we're close to a 10% decline. In the 95 years so far, we've had 53 declines in the market of 10% or more. Not 53 down years. The market might have been up 26, finished the year up 4, and had a 10% correction. So we've had 53 declines in 95 years. That's once every 2 years. Of the 53, 15 of the 53 have been 25% or more. That's a bear market. So 15 in 95 years, about once every 6 years you're going to have a big decline. Now no one seems to know when they are going to happen. At least if they know about M, they're not telling anybody about M. I don't remember anybody predicting the market right more than once, and they predict a lot. So they're gonna happen. If you're in the market, you have to know there's going to be declines. And they're going to cap, and every couple of years you're going to get a 10% correction. That's a euphemism for losing a lot of money rapidly. That's what a correction is called. And a bear market is 20-25-30% decline. They're gonna happen. When they're gonna start, no one knows. If you're not ready for that, you shouldn't be in the stock market. Stomach is the key organ here. It's not the brain. Do you have the stomach for these kind of declines? And what's your timing like? Is your horizon 1 year? Is your horizon 10 years or 20 years? If you've been lucky enough to save up lots of money and you're about to send one kid to college and your child starting a year from now, you decide to invest in stocks directly or with a mutual fund with a 1-year horizon or a 2-year horizon, that's silly. That's just like betting on red or black at the casino. What the market's going to do in 1 or 2 years, you don't know. Time is on your side in the stock market. It's on your side. And when stocks go down, if you've got the money, you don't worry about it and you're putting more in, you shouldn't worry about it. You should worry what are stocks going to be 10 years from now, 20 years from now, 30 years from now. I'm very confident.
Do you believe that the majority of small investors had lost money and that's why they're in mutual funds?
I wrote 3 books and I had great help with doing it with John Rothschild, I really want to help the average person. My wife and I have given all the profits from those books to charity. I want to help people do a better job investing, understand the market, because what amazes me is we've had this phenomenal market. You start 1982, August of 82, the market's 777. In May of 1996, it's at 5,700. That's up almost 7-fold. That's an incredible advance. Now how come there's not a lot more people buy in stocks? How come the number of registered shareholders hasn't gone up dramatically? When antiques were hot, lots of who were doing antiques. When rugs were hot, they were doing rugs. When baseball cards were in, thousands of people were into baseball cards, tens of thousands. And people were fixin' up old cars. The only thing I can conclude from the fact there hasn't been a great jump in the amount of people directly investing in the stock market has been in this best bull market of all time, August of 82 to 19, May of 96, best stock market ever. People must have done a mediocre job or they would be doing more of it themselves and they'd be telling their friends about it and their friends be doing it. So their method must be flawed. Well, for some reason, the public looks at stocks differently than they look at everything else. When they buy a refrigerator, they do research. When they buy a microwave oven, they do research. They'll get Consumer Reports. They'll ask a customer, what's your favorite kind of oven? What kind of car would you buy? Then they'll put $10,000 in some zany stock that they don't even know what it does that they heard on a bus on the way to work and wonder why they lose money, and they do it before sunset. Well, you've got plenty of time. You could have bought Walmart 10 years after it went public. Walmart went public in 1970. You could have bought it 10 years later and made 30 times your money. You could have said, I'm very cautious. I'm very careful. I'm gonna wait. I want to make sure this company, they're just in Arkansas and I want to watch them go to other states. So you watch, 5 years later the stock's up about 4-fold. You say, I'm still not sure of this company. They have a great balance sheet, great record. I'm going to wait another 5 years, it goes up another 4-fold. It's now up 20-fold. You still haven't invested. You say, now I think it's time to invest in Walmart. You still could have made 30 times your money because 10 years after Walmart went public they were only in 15% of the United States. They hadn't saturated that 15% and they were very low cost. They were in small towns. You could say to yourself, why can't they go to 17? Why can't they go to 19? Why can't they go to 21? I'll get on the computer. Why can't they go to 28? And that's all they did. They just replicated their formula. That doesn't take a lot of courage. That's homework. People spend all this time trying to figure out, what time of the year should I make an investment? When should I invest? And it's such a waste of time. It's so futile. I did a great study, it's an amazing exercise.